So weekly advisor movements, 8 October 2020. So net advisors leaving the industry this week, we had 32, which was down from our forecast of last week. I think we had 108 last week, so 32 this week. Down mostly due to the fact that Boyce came back into the market, having left Lonsdale, Boyce Financial Advisors, and also in terms of some Paterson advisors setting up their own license, RM Black. Now, it's always difficult doing a week-to-week forecast. We do try and get the intent from the advisors around what they're doing in terms of ceasing, exiting versus coming back into the industry. Unfortunately, we didn't get the notification in time, so that's why this number is lower this week. Switch licensees, 12 in terms of overall switches, so relatively low. And joined the industry, we had 2 new advisors. Shout out to a couple of the switches. So Andrew from Garvin, setting up his own license, Preferred Financial Services. Dushika going from AMP to Charter, so within the AMP group. And Nikki, whose hometown I'm in, actually just up the road, Crow's Nest, a little suburb about a few kilometres outside of the city in Sydney here. So moving from her own license to the Luna Group, which is actually Stanford Brown. So buying into the Luna Group there as a shareholder. Top gains, we've got Boyce Financial Services, as I mentioned before, new license, 11 advisors there. RM Black, a tip of the hat there to Morgans. So RM Black and Associates was set up back in 1935. That's how Morgans, and eventually became Morgans Stockbroking or Morgans Financial Services. So leaving Paterson's to set up their own license. GPS Wealth, a net gain of 3, Australian Unity, Interprac and Shaw and Partners all gained 2. Top losses for the week, we actually had a bit of a restructure at Vincent's Financial Advisory. So these 28 advisors were mostly accountants / business advisory members of their organisation. So no longer a financial advice register. So 28 actually leaving, I guess, officially financial planning in that respect, leaving the advice register under that restructure. Paterson's or Canaccord Genuity, 8, no doubt we'll see them pop up in another group, most likely RM Black. AMP down 5. And now MLC and Garvin obviously continue to shed advisors. MLC, you'll see there, actually had a shift of its advisors back last month, as I mentioned, into the GWN or Garvin brand. So hence the 521 to 105, and Matrix down 3. So quote of the week, this one is a shout out to the budget. So Josh Frydenberg, together bringing forward stage 2 and providing the additional low and middle income tax offset means more than 11 million Australian taxpayers will get a tax cut with effect from 1 July this year, providing them with more money to spend on what matters to them. So hopefully that means some more money to actually spend on or to invest on financial advice and financial planning. To determine what to do in the world of a pandemic. We actually are seeing an uplift, as I've mentioned before, an uplift in leads and an uplift in volume to financial advice. So I think this will only spur on more people to look at their money, spur on more people to seek advice. Now, some of the, I guess, the wants that we wanted out of the budget that may come into the future was obviously tax deductibility and or deductibility from superannuation funds around the cost of advice or around financial advice fees. So we'll wait to see what comes from next year's budget in that respect, especially with the record of advice coming into play with the early access to super regime. So I think the government is still looking at the ROA as a replacement for, or not as a replacement for, but alongside the statement of advice in terms of scaled advice. So we'll see what transpires there. So that's it for the week. We'll touch base again next week.